Well, good morning. Hello. These next video segments pertain to Chapter 38 of the Business Law text, dealing with limited liability companies and other types of business entity forms. Before we go down that road, there are a few housekeeping matters I need to take care of with you. Number one, I wanted to let you know and announce to you something you probably already know, that as we approach the end of the semester, it is possible for you to rate your professor. To go through the campus Canvas system, I believe, and there's a method by which you can rate my performance as a professor during this last semester in the business law class. I always encourage my students to do that. I value your feedback, both in the check the box part of the survey as well as the written part of the survey. I take very seriously the feedback that I get from my students, and in the past have taken a look at what they say and made various changes in how I do the class. For example, incorporating the PowerPoint presentation, which is what I did first began the last school year. So please take a moment to do that if you could, and I would greatly appreciate it sometime between now and before the semester ends. We're in the last segment of the chapters that we're looking at, chapters 36, 37, 38, 39, and 40 in the text, dealing with various types of business entities. Today we're covering chapter 38. Next week, we're going to be looking at chapters 39 and 40, which is the last week of the semester, followed by finals week. Let's see, as indicated, as I told you previously, section 2, the section 2 class will be taking its final on May 5th. It'll be going from 10 a.m. to 1 p.m. Section 1 class, the class that meets at 8 o'clock, normally will be taking their final on May 7th. That final will run from 7:30 a.m. to 10:30 a.m. Both finals will be 3 hours long, 60 questions as usual, multiple choice and true false, covering chapters 36 through 40. Okay, so hopefully that covers all that stuff. Let's move on to chapter 38. Limited liability companies and special business forms. The vast majority of this chapter pertains to limited liability companies, or what we call LLCs. They're a fairly recent creation in law when you compare them to, say, corporations and partnerships that have been around for a very, very long time. LLCs are fairly new. And they're very popular because LLCs, created by statute, combine the best of both worlds. Remember how we talked about how when you're looking to form a business entity, there are 4 questions or 4 issues you have to deal with. Number 1, the ease and formation and maintenance of that business. Number 2, tax consequences. Number 3, personal liability. And then number 4, the ability to raise capital to grow the business if necessary. And with regard to 2 of those, the LLC has proven to be very popular with people who form a business entity, because the LLC combines the best of both worlds with regard to a partnership and a corporation. On the one hand, with regard to tax consequences, the LLC takes on the characteristics of a partnership with its pass-through taxation. On the other hand, with regard to liability, the LLC is very similar to a corporation in that the liability of the members of the LLC is somewhat limited. Now, we've already talked about partnerships. We'll be talking about corporations in chapters 39 and 40 coming up. But take my word for it, LLC combines the best of both worlds. And we'll go into that a little bit deeper a little bit later on. The LLC is formed and operated in compliance with state law. It's a state-made creature. And as indicated before, the members enjoy a certain amount of limited liability. The exception would be if a member of an LLC engages in too much hanky-panky and behaves as if the LLC didn't exist and is just operating fast and loose, not adhering to the formality that's required in operating an LLC, they might face personal liability if they're not careful. So there are some guidelines you need to you need to adhere to when you are maintaining the LLC. Well, let's talk about the formation of the LLC. Actually, let's see here. Well, we better go with a few other things first. Let's see. There we go. Formation of an LLC, that's fine. When you form an LLC, it's essential that you fill out the necessary paperwork and you file with the state documents known as Articles of Organization. And it usually names the business, the principal address of the business, the name of the members, how it's all going to be managed. And the majority of the states allow LLCs to have just one member if you want. And so you can have one member of the LLC or as many members of the LLC as you want. So you file the Articles of Organization with the LLC. You engage, prior to filing the articles, you put together various contracts with people, maybe the landlord-tenant agreement for office space, buying furniture, buying inventory and such. And you, as the individual, the organizer, would sign those contracts. But later on, after the LLC is organized, you do what is known as a novation. Remember the novation, where you time out and insert a third party into the contract and change the agreement somewhat. You substitute yourself out and put in the LLC instead with that novation and those pre-formation contracts. And all the people you contract with know that that's coming down the pike, so there are no surprises to anyone. So you do the pre-formation contracts, and you set up the LLC by filing the Articles of Organization, and you're up and running, basically. There's certain things that you need to be aware of when you do the LLC, when you're operating in the LLC. One is jurisdictional requirements for the purpose of being named as a party to a lawsuit. As we talked about previously with a corporation is viewed in the eyes of the law as being like a person. And the same is true with an LLC. An LLC can be sued in court. It can be named as a party to a lawsuit. And in the eyes of the law, an LLC is also viewed as a quote unquote person. But a question exists as to when does a court have jurisdiction over an LLC? When does a court have power to speak the law over an LLC? Well, let's compare that with a corporation. As we talked about before with jurisdiction, it's possible to have jurisdiction in the state where a corporation has filed its articles of incorporation and where the corporation primarily does business. Well, with an LLC, it's a little bit different. A court has jurisdiction over an LLC in the states where the members live. So if you have an LLC and you've got one member who lives in Nevada, one member who lives in Arizona, and one member who lives in California, it's possible to file a lawsuit against an LLC in any of those three states. That's where you can have jurisdiction over the citizen of the corporation. Let's dig deeper into the advantages of an LLC. Well, as we talked about, there's limited liability. The members of the LLC, the amount of their liability is limited to the extent of their investment in the LLC. Their personal assets are not at risk. Their homes, their bank accounts, their cars. Only the amount of their investment in the LLC. And that's a good thing. People find that very attractive in the LLC. Once again, though, if you don't adhere to the formalities that are required for an LLC, if you play fast and loose, if you guarantee loans personally instead of through the LLC, it's possible that you might have personal liability. So you got to adhere to the formality as well if you're going to seek the protection and get the benefits of the limited liability that's available in an LLC. There's also a lot of flexibility in taxation when it comes to an LLC. First off, let's break this down. If the LLC, if there's only one member in the LLC, one guy organizes it and it's a one-person LLC, that person is going to be taxed like a sole proprietor, like the guy in the barbershop. Any money the LLC makes, any income the LLC makes, rather, is going to be taxed to that one member individually. If the LLC has two or more members, then it can be taxed. They can choose to either have it taxed like a corporation or have it taxed like a partnership. The members of the LLC can choose. More often than not, the members of the LLC, where there's two or more members, choose to have the tax technique of a partnership, where the money passes through to the members and they are taxed, as opposed to a corporation, which can experience double taxation. In a corporation, the corporation is taxed when it makes income, when it has income, so it has to pay income tax. And then when a corporation pays any dividends to the shareholders, they're taxed as well, which the people call double taxation. We try to avoid that through an LLC by being taxed like a partnership. So there you've got the flexibility in taxation with an LLC. The difference between an LLC and an LLP and an LLC, a limited liability partnership, is that an LLP is a partnership and must have more than one member. Remember, a partnership always has to have at least two people. But an LLC cannot have, is not a partnership and can have only one member if it wants to. But the application for both is about the same. They both have limited liability for their members, and they both have situations where the money can flow through like a partnership, and the person can be taxed like a partnership, except if it's just one person and it's like a sole proprietorship. Finally, there's some disadvantages of an LLC. LLC laws are not uniform and they can vary from state to state. It's, like, again, a fairly new creation of the law. So that's the one thing you've got to look out for. If you're going to be having a member in a state, a member of an LLC live in a state, you want to be familiar with those state laws in case the LLC gets sued in that state's jurisdiction. Well, that covers everything that we need to cover for now. We'll end this segment and we'll pick up with the remainder of this particular chapter, chapter 38 on LLCs. So stay tuned.